Hi, I'm Jessica Amir for the Finance News Network. Today I'm joined by the Chief Investment Officer of Shaw & Partners, Martin Crabb, to talk about the outlook for the ASX and Wall Street. Hi Martin, welcome.
Hi, Jessica.
So first up, we've seen volatility really return to Wall Street, really on the back of better than expected jobs and economic growth data that's come out of late, and that's really caused the Treasury yield to pop. What does this all mean, and what does it mean for local investors, and when can we expect volatility to ease?
So obviously in February this year we've had a big sell-off in the US market and the Aussie market, and we've had a volatility spike. So volatility's been very low for a long period of time as people have been selling it to make money. I think the markets were mispricing risk, and the bond markets are probably mispricing inflation. So the 10-year Treasury's gone from 2% back in September to 2.4% at Christmas, now up to almost 2.9%. So that's obviously caused the equity market to suffer a bit, but against that backdrop we've had much stronger earnings growth and economic stimulus and tax cuts. So all of those things have sort of moved the markets back to almost where they were. So we will see volatility rear its ugly head again this year, but at the moment the sort of markets are quite sanguine in the outlook for growth and so forth.
So can you give us any gauge on where you think the Dow Jones will be? When do you think it'll hit 26,000?
Obviously the Dow Jones, it's on a bit of a tear. It bottomed at 6,500 almost 9 years ago now. So we're almost 9 years into a bull market, which is long by historical standards. But there's such strong earnings growth, Jessica, and earnings growth's being upgraded as well. So as the tax cuts are being factored into earnings, that tide's going to keep rising for the majority of this year. So as long as earnings are going up and bond rates aren't selling off too much, we think the Dow can head a bit higher. Not quite sure where that goes. Obviously it got probably 1,000 points higher than he was where it was before. So I'd expect it to retest that high and maybe even go a little bit higher later this year.
And what does it mean for the ASX 200 and local investors?
Yeah, we're being dragged higher if you like. So around about a third of the companies in the ASX have some sort of offshore earnings, and quite a few companies are global by nature if you think about mining and pharmaceuticals and these sorts of industries. So they are global companies and they're benefiting from the same growth that the US companies are. So we will get dragged higher by the Dow, and that's pretty clear. But I think if the Dow does run into a bit of trouble, obviously the Aussie market's going to follow that as well.
Can you pinpoint where the ASX 200 will be, say, by the end of this year?
I'd like to be able to. That would be good, wouldn't it? I mean, look, I was asked this at the end of last year where I think the market would end the year, and I felt it would probably end round about where it started, but it would probably peak somewhere in the middle of the year. And so I think sort of 6,000-ish is kind of where I think it'll be at Christmas time. But in the middle of the year, I'd expect it to be a couple of hundred points higher than that, because I think it's a first half, second half sort of year.
Martin, now for the sectors that we can look out for this year. Last year, it was tech stocks in the US. And also for the ASX, it was, the lithium players, the medicinal marijuana players. What can investors really eye and sink their teeth into this year? Yeah,
look, I think there's a lot of benefits in investing from a sector basis, from a top-down basis. So if you think just broadly what industries are doing well, we know that the Chinese, consumer is an emerging, theme. There's 350 million middle-class Chinese people who are coming into money, if you like. And so they are tending to upgrade their consumption. So things like Australian wine, Australian beef, our milk powder products and those things. So those companies that are selling into that market, the Bellamy's, A2 Milk, Treasury Wine Estates, those companies going very, very well, and it's difficult to see that slowing down. China's middle class also starting to travel more. So there's 4 billion trips taken in China last year, only 100 million of them were outside of China, and about 1 million were Australia. So we're about 1% of that market, but that market's growing at 20% per annum. So it's difficult to find too many companies that are exposed to travel, but obviously airlines, airports, travel agents, and also people who own tourism assets. So a company like Sealink, for example, which owns the Captain Cook tours here in Sydney, is one that's going to be a beneficiary. So I think if you play to those areas you think are going to do well out of China, you do well. The other area is obviously commodities. So if we do have a breakout of inflation, which is what everyone's kind of feared about at the moment, we will see commodity prices continue to do well. So pretty much everything in the mining sector and the energy sector will do well in a rising inflationary environment. So I think if investors aim at those two themes, they'll do quite well this year.
And just honing in on mining, if we may, what key sectors really in that mining space can we eye?
And I think iron ore and coal have been surprisingly strong. Most people have factored in a slowdown in China, which doesn't seem to happen. So the iron ore names still look pretty attractive to us, but we're probably more interested in a broader commodity such as copper or nickel, where there's more sort of, it's not just relying on China's steel industry for that, it's basically global growth. So we like Oz Minerals in the copper space, we like Western Areas in the nickel space, and even stocks like Iluka in the mineral sand space is going to do quite well this year as well. So there's a whole bunch of stocks there for investors to choose from.
And Martin, perhaps your final tips for investors for 2018?
Yeah, look, I think it's going to be a game of two halves in 2018. I think the first half of the year looks really interesting and money's going to be made. I think the second half of the year gets a lot tougher as interest rate hikes by central banks start to bite. So I think the most important thing for investors this year, Jessica, is diversification, is to have a broad range of assets that you own, whether that's across property and bonds and shares, but also around the world, not just to have all of your money in Australia, because I think, you know, there are industries around the world which we can't get access to here, and I think investors should really look to invest offshore with a broad range of asset classes and really get diversified for the year.
Well, Martin Crabb, thank you so much.
Thanks, Jessica.